Tiaki Capital Podcast. Smart Money Deals.
Hi everyone, welcome to the Tiaki Capital Podcast. We decided to do this to share some of our views and opinions and to talk to some industry leaders to give you some insights into what's happening in the world of business in New Zealand and what's available in terms of opportunities and what are some of the challenges facing entrepreneurs, and also to explore the what's happening in the marketplace. With me today is my co-director, Pauras, Rege, and if I didn't introduce myself earlier, I'm Kenneth, Leong, director at Tiaki Capital. So today we're going to cover a topic that is of interest to many business owners. So we are talking about the winners and losers as a result of COVID. And before that, I'd just like to ask Pauras perhaps to share some of his views in terms of what he's seeing in the marketplace in terms of deals. Pauras.
Thanks, Kenneth. Hello, everybody. So basically, what we have seen in terms of the mergers and acquisition or M&A activity through the last year, especially the last quarter, has been phenomenal deals taking place. The final quarter has shown significant increase of activity compared to 2020. And looking ahead, we also see that there are certain sectors which will continue a strong trend in the M&A activity as well. The main couple of main reasons, obviously, for this activity has been a lot of monetary and fiscal help given by the government in light of COVID-19. So record low interest rates has really resulted in driving up the activity with asset prices going up and cost of debt coming down. And while we are seeing some trends where the interest rates are going to be growing in the current year, but there are certain sectors which will still experience this growth, mainly because in New Zealand, organic growth is very hard. So to grow businesses, usually people try and acquire either their competition or some facets of other companies to gain competitive advantages. So that's just a very brief outlook on the market at the moment.
Yes. So I agree. I mean, it's really hot out there at the moment for the reasons that Pauras mentioned. However, not all businesses are created equal, especially in light of the challenges thrown up by COVID. So what we see is that businesses are grouped into either COVID winners and COVID losers. So we come across many businesses who have done exceptionally well in the face of COVID. They're experiencing significant revenue growth, rising margins, and because of relatively inelastic demand, they've done very, very well. Now, the sectors that spring to mind include logistics, building services, essential services, food production, supermarkets, and professional services. These COVID winners are experiencing boom times. So in fact, I mean, we've seen many business owners increasing prices, and we ourselves have also been surprised by the market's ability to absorb these price increases. Now, of course, headline inflation is rising, and this is now flowing through to inflation, and we think that inflation will stay high for some time. And also what we've seen is that business owners have made, the COVID winners have made good margins and are able to pay staff more. In some ways, they kind of have to, right? Because I think many of you know that we're starting to experience a brain drain. And we are hearing anecdotally from our friends in Australia that the wage gap is widening. So we're seeing, across the board, like a number of people resigning and taking up positions in Australia and getting paid significantly more. So in that respect, I mean, businesses have had to increase prices. So we think the brain drain will only accelerate as New Zealand relax border restrictions. And as we know, I mean, like effective next week, people can come back and forth freely from Australia. So there are some sort of macro factors affecting the situation here. So Now, on the other hand, we're also encountering businesses deeply impacted by COVID, right? So these businesses have found it very difficult to trade during the past couple of lockdowns and are impacted by border closures. So perhaps the Pauras, you can talk to us about what you're seeing in terms of people who have not done so well as a result of COVID.
Sure. Thanks, Ken. Basically, COVID has impacted three major sectors of the market, namely being hospitality, tourism, and retail businesses. Tourism business is pretty obvious because of the border closures. There's not much travel opportunity happening. In terms of hospitality and retail, because of their involvement of staff and involvement of a lot of close contact touch with customers, this is the reason why the lockdowns have resulted in these sectors getting impacted pretty heavily. But we are seeing a light at the end of the tunnel with recent announcements of borders opening, with the whole lockdown levels coming down. We do see there will be a lot more increase in the domestic activity. So hopefully these sectors can pivot and we see an ongoing pent-up demand that has been that can be seen in the sectors. Hopefully because of that, they will be able to overcome these challenges and perform strongly in the coming future.
Yeah, I agree. I think the other sector that's related to tourism that has been badly affected is international education. So we used to export pre-COVID more education than we did wine, and so it's very unfortunate that we have not reopened the borders for international students. Now we're seeing the first batch come through, perhaps 5,000 of them coming through for the second semester. But the Aussies have really managed to fully reopen and process enrollments, and they're welcoming international students with open arms. The Canadians have done this, and there are a number of competitors out there in the international education sector have done exceptionally well in terms of the pace of reopening. So we think that perhaps the government could do a bit more to speed things up so that the sectors that are badly affected by COVID can recover. Now, so the valuations of these businesses that have been badly affected have also gone down, right? As a result, cash flows have gone down and there's a degree of risk. So valuations have come down, quite the opposite of what we've seen with the COVID winners, where valuations have gone up, not just because of demand and for the reasons that Pauras outlined earlier, but the cost of funds and availability of funds have encouraged people to pay more for good businesses. So good businesses are in short supply, and many of these business owners are holding on to them because they feel that, look, I mean, they're making good money, why sell now? And even if I sold, then there's perhaps some difficulty in placing funds in high return assets. However, there are always going to be people who have to sell. So there are good opportunities out there. We're coming across a number, and Pauras is working on a couple of amazing opportunities right now. These are sort of once in a generation type the opportunities where owners have chosen to exit. And so we are seeing those deals. And at the same time, I would encourage you to not overlook some of the businesses that have been badly impacted. Now, particularly if your long-term outlook is that tourists will return and COVID will be behind us. Now, right now, there's uncertainty, Ukraine, and a number of factors as we speak today that are creating a high inflation. They are creating a lot of uncertainty. But if your view is that the short-term uncertainty is not going to last, then you may look at this from a Warren Buffett type angle, right? Like we buy low, sell high, look at some of these riskier businesses that may be selling for substantially less than they would otherwise. So, there are opportunities out there. And so our team, I mean, we're working hard across the board on a number of different deals. And And so we encourage you to get in touch. And if you're looking at the opportunities to buy or to sell, our team would love to hear from you. So look, thanks for joining us. I hope this brief podcast has been helpful, and hope to reconnect with you soon. Cheers.